Hi, this is Akshaya from akshayashiv.com, and herein I give a wrap-up of all commodities in the MCX as we see it on January 27th, 2015. Let me begin with bullions. Gold future fell the most this year on speculation that an election from Greece won't result in the country's exit from the Eurozone. The euro rebounded against the dollar last week, reached a 5-month high after European Central Bank announced plans to increase the economic stimulus. Gold futures for February delivery dropped 1% to settle at $1,279.40 an ounce in the COMEX in New York, the biggest decline since December 31st. Our weekly call in gold: sell gold around $1,294 with stops above $1,305 for targets $1,280 and $1,270. It faces a very strong support at $1,270. Next move only on a break below this. In the MCX, gold mini February looks weak if it holds below 27,660 with resistance seen about 27,950 and could test support at 27,330. Silver dollar dropped from $18.45 to $17.6. Strong support now seen at $17.6. Our weekly call in silver: sell silver between $18.3 to $18.4 with stops above $18.65 for targets 18, 17.7 and 17.5. In the MCX, silver mini looks weak if it holds below 39,250 with resistance seen above 39,460 and could test supports at 39,000 and 38,800. Moving on to the base metals, copper gained the most as global stockpiles dropped to a lowest in more than 5 years. Copper rose on speculation that the economic stimulus would shore up prospects for the demand in Europe. In the last week, copper posted a 6th weekly loss ahead of the manufacturing date from China, the biggest consumer of this metal. But formation of strong bear candles in the daily chart suggests that the prices will come down. In the MCX, copper can be sold at two levels, at 345 and at 347, with stops above 349 for targets 338 and 336. Our weekly call in copper: sell copper between 340 to 343, with stops above 350 for targets 325 and 320. Nickel currently trading at Rs 896, resistance seen at 903 to 905. On a positional basis, resistance seen at 925. Sell on rises would be the best strategy. Positional support seen at 860. Our weekly call in nickel: sell nickel only below 890 for targets 850. Any close below 850 could move the prices sharply down to 825 to 800 levels. Lead in the MCX looks weak below 113.80 with resistance seen about 115 and could test support at 112.40 and 111.60. Our zinc resistance now seen above 131 with support seen at 129 and 128. Lead also looks weak as we've already told you as per our intraday levels. Aluminium currently trading at 114.35. Some up move can be seen on a hold above 114 and support now seen at 112. Crude traded the lowest in 6 years after crude oil inventories rose to a record high. Stockpiles in the US world's biggest US consumer expanded to 402.1 million barrels last week. The world is oversupplied by 1.5 million barrels a day according to the OPEC General Secretary. The contract lost 44 cents to trade at $44.15 on Monday, the lowest close since March 2009. Strong resistance seen at $49.20 and support at $44.40. Our weekly call in crude: sell crude below 2770 with stops above 2900 for targets 2600 and 2500. Intraday support seen at 2770 and resistance seen at 2840 and 2860. Coming to natural gas, contract expiry is today. Support is seen at 177 and resistance is seen at 184. Overall trend remains bearish. All our live calls will be posted in our website blog www.akshayashiv.com. We are also on Facebook and our Facebook page is facebook.com/Lotus Advisory Services. If you have any technical queries, you could write in to us and we will get back to you as soon as possible. We are also on Twitter, twitter.com/Akshaya. Hope you have a safe and a profitable trading day ahead. Thanks a lot for viewing my presentation.